We've got some very strange things taking place in the market. So today's video, it's going to be a really important one. There are a few narratives and potential catalysts that might drive some very interesting market behavior in the next coming week, potentially month, or even potentially sooner. So we're going to talk about that on today's Stock Market Brief Show, where we navigate financial markets through the lens of technical and intermarket analysis. Do me a favor and go ahead and sponsor today's video by smashing that thumbs up. It is greatly appreciated. And subscribe to the channel if you like this type of content. That's how we can get it out to obviously more people. We're going to go into really kind of the conditions of the market first and the expected move. So we're going to get to the nitty gritty, what's driving the market, important levels, right, on these main index products. But then I want to get into what's been taking place kind of behind the scenes in various quantum names. I want to look into Bitcoin because there's some interesting correlation there. But then I want to get into some interesting news that may develop into something that could affect all aspects of the market. Okay, so if we take a look at the 11 sectors that make up the S&P 500, what do we lead today? Real estate, and we had utilities, technology not too far away. S&P 500 finished slightly up on the day. There was a lot of trading volatility today, right? So we had that big Trump tweet day, and then we just been doodling in and around that 6,700 since then, basically trading with inside that one big range candle. So there hasn't been a break above it, hasn't been a break below it yet, and we're basically trading 61.8% towards a retraced of this from this high to this low over here. And this is normal behavior. What you've been seeing in this market, these big gap up, big move down, big move up, big move down, big move back up, right? What you've been seeing here is just volatility in and of itself, right? So volatility for the last 3-4 trading days have been above and floating around 20%. And what that means is it opens the floodgates for, larger price swings in the S&P 500. If you take a look even further and you look at the volatility of volatility, it remains above a threshold that many hedge funds and many volatility traders and so forth look at, and that happens to be right around that 110, a slightly higher range on volatility of volatility. So things could get, very interesting if you remain above that 110 on the volatility of volatility index. Now, as far as back month, first front month volatility goes, it's kind of in the middle of nowhere right now. It's not like it's an oversold condition or an overbought condition. Those are the kind of levels that we look at, but we're continuing to watch because if the market wants to sell off, I'm going to be paying attention to see if back month, first front month goes under that 1.0 marker. If you look at also just how the gamma versus spot chart, what this is telling us is where the S&P 500 is and where the gamma flip line is, and you could see we're in theory right by it, right? This is gamma neutral, and when you're gamma neutral, what can happen here is if price starts to break up further, right, you can have volatility obviously come in sharply, and if it starts breaking down further, you can have volatility quickly increase because they're market makers, right, dealers, they're in this delta neutral zone, we'll call it, and there's not really much hedging activity that needs to occur until you really break from those specific levels. Now, if we look at something like CTA positionings, this is interesting. We've been sharing this chart pretty much in every scenario. They become sellers at this point, all right? So if the market goes down, a little bit more, these guys can step in and become, it could be more aggressively selling. So we got to keep an eye on various levels that could potentially trigger more volatility in the market. So I'd imagine just be paying attention to around, the lower levels of this massive day over here could be one of those triggers. If we continue on, we'll look at vol control funds. You saw the sharp decline over here. That was the day, obviously, that we got that tweet. Interesting stuff over here from B of A. This was weekly net buying of single stock. So basically, you're at these elevated levels that you only see a few times throughout history. So basically, everyone's buying the dip when you see that dip. If you look at net gamma, 7,000 is the call wall currently. So traders continue to reach out further at this current moment, and in 6,700, which is basically where price closed slightly under today or right at, there's not much there beneath us. So if we get above 6,700, we can hold above it. This opens the doors to 50 points higher to 100 points higher. If we take a look at where we stand within that gamma flip line, you can see the gamma flip line, we're slightly above it right now. So we're technically a positive gamma, but when you're this close, think of it as a zone, right? You're in that more of a neutral stance here. Today, we did tag the upper daily implied move and we started to come back off and then we came back up. We did not hit the weekly expected move on SPX, but we did tag the weekly expected move on the SPY. Those were vastly different heading into this week. This is the S&P 500 chart with the updated daily implied moves. So tomorrow we're looking at about 67.27 down to and around 66.15. That's just the daily implied move. Okay. If we continue on and we look at the daily implied move for SPY tomorrow, this is a big implied move. Once again, right? When you're in that gamma neutral or get negative gamma under the flip line, the expected moves, the ranges of risk open up. When volatility, right, VIX is above 20, above 19, these ranges, they will open up. The risk becomes greater. And you saw that today as we came into the upper implied range, and then bam, we saw volatility really step in. This is buying into buying, selling into selling, buying back into buying. You get those more pronounced swings. Now, overall, we still have a declining 5-day moving average, right? So this hasn't changed yet. You can see we are kind of like following this pretty steep trend here. So if we maybe break above that, that opens the door right back up into the upper weekly implied move, maybe the daily implied move too. But if we're going to continue this trend and we start breaking back down through the week to date volume weighted average price, that just opens the door to the lower daily implied move, which is about 659.50. If we continue on, this is where things are getting a little bit interesting in the markets. And you got to look at some various players in the market. So first and foremost, I want to just call out NVIDIA. NVIDIA is the largest market cap name in the world. I believe it's in the world, right? Yeah, over $4 trillion market cap. And then it's the number one holding, obviously, in the S&P 500, which is a cap-weighted index. And today, it was slightly down, right? You saw things like AMD catch a 10% bid, but NVIDIA, remained relatively flat. And surprisingly enough, it kind of looks like the chart of Bitcoin. And this is a little concerning here too, is as we're seeing like small caps rise and we're seeing a bunch of different names rise that are like higher beta, Bitcoin has come in. And I'm a little concerned here if we start kind of breaking this range, I guess, to the downside if it does start to crack lower, because Bitcoin typically has a strong pull and correlation to other assets that are of higher beta. So, are we at the lower range? Are we going to start to potentially bounce from these areas? That might be the case. It has not shown its hand yet, and it's been relatively weak, including on a day like today. So is Bitcoin kind of giving us some insight of something maybe to come? I don't know. I don't have an answer for you, but it is still concerning not to see Bitcoin participating in the rally that we just kind of saw these last couple of days after that initial catalyst. Other strange things that are taking place, you can look into the quantum space. These things have gone absolutely parabolic, right? So like QBTS, right? You saw these things base out. I posted some of these in trade ideas at some point. Now look at the range of these candles. They're getting wider. Yeah, this move is actually happening on some pretty strong volume to the upside, just like it did over here. But then you go through periods of consolidation or bigger pullbacks. And there's a lot of concerns floating around the internet about these quantum names, about their headquarters, about how they're unprofitable. This is the thing about these type of names, right? When you have a story behind it, and you have momentum chases that momentum, and then they keep going until they don't. And when they don't, they start to break. And I will tell you from just a technical perspective, when you start getting these wider range candles that you're not used to seeing from, periods of lower volatility, right? Markets move between contraction, right? They get tight, boom, 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 to expansion. And when you start getting wider range candles, yeah, it's typically a sign that most likely we have a consolidation right around the corner or a pullback. So these things continue to press higher. It's not just D-Wave Quantum. There's all types of names. Look at Oklo today. Oklo gapped up 6%. Rand shot higher almost to 200. I remember posting about this chart down here and even prior to that. And these things have just absolutely incredibly just exploded to the upside, right? Oklo, I don't know anything about its fundamentals, but I'm sure that if we look into it, they're not that great, right? I would imagine they're not that great. It's a story name and sometimes stories grab hold. And now you're starting to get these wider range distribution type candles. And this is where, once again, the market could still press it higher. They could still press it higher, but you're getting this kind of frivolous range on a lot of these names that have been, bubbly. Rigetti Computers, right? This thing absolutely exploded to the upside too as well. It's trading at around near $60. Closed at a new closing high, I believe today. Not an all-time high hit, but which was just yesterday, but a new closing high as it finished slightly up today. But once again, a big range candle got smacked down back to 50 and right back up to 56. So very, very volatile names have been absolutely there, parabolic. But then you're starting to see weakness in other names that have been these like market like leaders in a way, like things like USD, United States, I don't know, UAM, this thing shot up to the upside, but look at today and the prior day. You get all of a sudden these wider range candles and boom, right? You start to see these names take a little bit of a hit. A-Lab, right? We were looking at this as a trade idea down here, and prior times too, probably in around here. I'd have to go back and in my Discord and look when those were posted. But now look at it. It does not look good right now. This is, it just doesn't look good. You're getting large, it doesn't mean that it can't shape back up, but you're getting an expansionary move on high volume, but it's to the downside, and you're going from 262 down to 161 in the matter of a few trading weeks. It's pretty crazy price action, and this is the type of stuff that parabolic moves can lead to. This is why I'm showing you these specific names. Open, right? Another parabolic move. This chart, I mean, it doesn't look horrible, but, you're talking that it went from 51 cents, got, story name behind it up to 10 bucks, 11 bucks. Maybe it got some more gas in the tank, but now it's, putting in these lower highs today, right? Or we saw this follow through. I mean, it kind of looks like it's just stair stepping down to potentially break back under these. So these are the names now that you got to be a little bit more careful. You get the parabolic move, you get hit, and now it's kind of consolidating, okay? Once again, it doesn't mean that these can't obviously go higher, but I'm pointing this out because there's a lot of names that have not seen that move down really yet. Another name with like CRDO, right? This is another popular name. We ran from way down here to 30 up to 176, and now it's trading at 131, and you're getting cracked, off these parabolic runs, and now it's starting to see some pretty big volume to the downside, right? It traded sideways, and then we cracked lower. Hey, perhaps these set back up in the future. Maybe it breaks out. Maybe it does something like this and comes back up and whatever, and then starts heading higher. Cool, maybe. But right now, a lot of these market leaders that have grabbed the attention of so many retail investors, you're starting to see weakness in them, and that could be a potential sign that there's more to come. Okay, and then like I said, we tied this in with looking at what Bitcoin's been doing, right? So I would say, yeah, these names, there's going to be bounces in all of these names. They're active, they're high beta, they create for good shorter term swings and potentially longer term moves out of bases. I'm going to go over some of the names that are looking like good setups still, because a lot of these names, people, like when they see the 50% pullback or 20% pullback, they try to go all in, and then they try to buy the dip, thinking it's going to go higher, but then it's going through a period of volatility, and you get whipsawed around, and you got to look for the right setups, okay? The Sailor to Shift tool, right? We didn't cover that one yet. I could have covered it earlier, but this is on a sell signal, not necessarily a trigger yet, but this is, that's just a strategy that I put together when I first launched this, but some people like to front run it when it crosses below it. That's their triggers. Do whatever you want, but it is still a negative rate of change between Bitcoin and gold, and that has, produced this sell-off. When we started getting the buy signal, as we started breaking out buy trigger, buy signal over here, you have to go watch that video, but what I would talk about was, well, from where prices come from, you don't want to buy the breakout if price made a very strong move to the upside. That's, not the smartest idea. So what I had said in that video was, I'm going to look for the consolidation. If it starts to consolidate and we can obviously hold above that, then I'm going to look to execute into Bitcoin. I didn't get that opportunity, unfortunately. So perhaps maybe if it comes back up and starts to shaping back up and this starts to turn back around, then I will take that opportunity. If we take a look at gold, this is where it's going to get interesting. Gold has been on this monster tear, keeps pressing higher and higher on this big breakout. Another name that's just another asset, right? Commodity that has been just going absolutely parabolic. Now, this is some of the interesting charts that I want to share, and then some of the narratives and potential catalysts that can cause even more volatility in these markets and various things. So when I look at gold, right, if we look at gold volatility, which is a GVZ, you can pull this up yourself. Up here is gold volatility, that's GVZ. Over here is gold itself, okay? This, I believe, is the end-of-day contract, spot, gold spot EOD, okay? GVZ, if we look at gold volatility, you have this positive skew. So when volatility goes up, you typically see it rise with the price of gold. Okay. Well, these spikes typically they don't last, right? These spikes. So I'm highlighting various spikes, like sharp, aggressive spikes in, the recent 5 years that we've seen in gold. And what I'm highlighting here is, okay, what happened after, right? So if you look at those sharp spikes, which maybe this would have been a sharp spike, but it headed higher, but this sharp spike ended up leading to a pullback. That was the 2022 top, right? And if you remember, 2022 was what? 2022, in the midst of it, was you had the Russia-Ukraine war. We went into a bear market in the stock market. Over here, right? Gold started recovering going into 2023. We had the volatility spike, and what happened? Well, you actually got a consolidation slash pullback, right? It went off, but overall consolidation. Over here, what happened? Pull back, and then we consolidated. Okay, so gold after a sharp spike consolidated. Over here, consolidated. Over here, kind of pulled down a little bit, went up, consolidated, and then went higher and consolidated. So this one actually went higher on that specific spike. I didn't count these little spikes over here. I just looked at that one because that is that one kind of one-off versus these other ones. Okay, look at this spike. This spike, first off, we had one spike, and then it went higher, and we spiked up there again. And this led to what? That led to like a 6+ month consolidation in gold before breaking out. Why am I sharing it now? Because look at what gold volatility is doing. Can gold volatility go higher? Can this go higher? Yeah, obviously. But we are seeing a spike. We've seen these spikes play out before. Gold volatility comes in, leads to consolidations and or pullbacks. And I feel like that is now a clear sign after seeing this kind of run up to these prior levels over here after this parabolic run that we could be very, very near that period of gold taking its time to consolidate. I'm not calling for gold to crash. I'm looking for pullbacks and consolidations, and that might open up opportunities. Okay, it goes a little bit deeper than that, and we will get into it. But first, I wanted to just show silver too. This is SLV, the ETF, not the spot price of silver, which I'll show in a moment. Silver ETF, I posted out on Twitter that it did, I was about 10 cents away from it, and I was like, oh, well, I want to watch history. So I just sat there and just watched it on my screen, and we clicked on SLV, a new high since 2011, and closed at 48.33, which is basically right on it. And this is also in and of itself is a parabolic run, right? You got these, like, look at these trend lines, right? You just go from these areas to like, look at this. It's parabolic, and parabolic moves, right? Like we've seen over here in the past, they do lead to pullbacks and they lead to consolidations. Now, the miners, if silver gets hit, there's a strong correlation between silver and miners. A lot of people compare gold miners, right? And even silver miners, gold and silver miners to the price of gold, but you should really look at gold miners and silver's correlation. For me, it's a much, 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 much more clearer correlation and a stronger, more positive correlation at that. So the reason why I say it is because if silver is going to back off, pump its brakes here in the near week or so, chances are gold miners are going to be taking a little snooze too. And what I found interesting here about this is now we just reached record levels. This right here is we're looking at the extension past the 200 EMA. We're 48.65% above the 200 period EMA. The last time we were at these levels was over here in 2016. We pulled back, we went higher, and then we went through consolidation, pullback. That lasted for obviously years there. And you can see we're just, this is the highest that it's ever been. It reached its highest it's ever been in all of its history of the GDX, which dates back to like 2006 when it started, 2007. Okay, so a couple other interesting things. These are more narratives, and I don't put much weight to narratives, but the idea that it's a potential catalyst is interesting. And that happens to be, I mean, first off, we got all kinds of potential catalysts, right? We got the government shutdown going on right now. We don't know when this is going to end. Okay. We have going back and forth with China, okay, which is also concerning in and of itself because it's a huge economy in this world, and it has the potential to really shake markets. We know this. Okay. So not only that, but then more quietly, there's a lot of talk, right? We had Russia strike Ukraine again recently at some energy sites, but now there's been this last week been talk about potentially giving Ukraine Tomahawks. And, one of the articles today, it says firepower is coming for Ukraine, Hagseth tells NATO, okay? But he didn't mention Tomahawks, okay? He didn't directly mention Tomahawks right then and there, but that's been floating, right? That's been floating around. So Tomahawk missiles for Ukraine should be on the table. And if they are on the table, what does that actually mean? Well, in short, Ukraine has wreaked havoc on Russian oil installations, but with its long-range drones, but with missiles like Tomahawk missiles, it could inflict greater damage. So the narrative here is if the U.S. was to give Ukrainian Tomahawk missiles, it opens the door for potentially targeting areas that could affect oil in Russia, right? And that could have an effect on the price of oil, right? And what have we seen in the past happen? Well, we've seen things like defense names do really well in these conditions. So for example, I only put up Lockheed Martin right here. So LMT, right? This has, been going nowhere all year, right? And it's, made a little bit of a clawback over here. It's kind of pulling back, consolidating. Is this thing going to potentially take off here in the near future? Maybe that narrative helps drive it, or maybe it's just price action and flows that drive it. But you also got things like, NOC, I believe. You got Raytheon, which I believe is RTX. So look at defense names. Keep an eye on them. Put them on your radar. But if this happens or occurs, or, you know, the market sniffs it out, that could actually affect the price of oil. And oil, as one of the, you know, largest global commodities, that can affect various markets. So you need to understand correlations that oil has. Now, oil has been breaking down. It's been in a bearish trend. It does not look good, right? It doesn't. It's bearish. However, if something like this were to occur, and all of a sudden you get this big move up in oil like we've seen in the past, or oil out of nowhere just fires off like a rocket ship, what effect does that have on various other markets? Well, for example, it'll have effect on the 10-year yield, as it has in the past. Like we've shown, oil right here is the black line, the 10-year yield is the candlestick chart, and you can see they kind of move hand in hand. In fact, oil a lot of the time leads the way of the 10-year yield. So if that were to occur and oil starts spiking up higher and this starts popping back up, who knows where. This has also been breaking down and bearish. But if this starts to, you know, break back out to the upside, maybe that can have an effect on various assets as well. And, you know, you can pull up the correlations to yourself to various things, but I figured I'd share this with you because oil's been running like crazy. Sorry, not oil, gold's been running like crazy. So I was like, well, if oil does start bouncing, what's its correlation to gold right now? And if I look at this, I'm like, holy moly, on a 15-day rolling period, that's a minus 0.8 correlation, right? So if we do get some sort of move in oil for, you know, geopolitical pressure, whatever the case is, and oil starts moving higher from here, that's just in the shorter term time frame, based off of this correlation, based off the current data, that just tells me that's going to negatively impact the price of gold, okay? And then you look at gold over here on a 30-day period, minus 0.7. Look at it longer, 90, minus 0.62. 120-day, minus 0.29, so not much there. 0.57 if you go out 180 days. So it's these shorter term negative correlations. As gold rips higher, oil's been going lower. So one might come to the conclusion that if oil rips higher, that can actually be the effect that we see take place. Now, we can take it out a little bit step further, because we already know that oil has a positive correlation with the 10-year yield. You know, obviously environments change, correlations change. You can see that here on the 15-day period. But what is the 10-year yield's correlation to gold? So if the 10-year yield actually starts moving higher from here, well, right now you have a minus 0.77 on the correlation from a 15-day perspective. 30-day perspective, you ain't got no correlation, right? So 30-day rolling correlate, that doesn't even matter. However, 90 days, minus 0.77, minus 0.75 for 120, and then minus 0.56 for 180. So a move higher in oil, if that affects yields, yields can affect gold, and it can affect many other assets that you hold and that you see if that were obviously to occur. Now, that is just a story, and stories don't always come true, but it is something that is still kind of on that back burner. Okay, so we went over a lot today, and once again, it's all things that you got to be aware of, things that you got to pay attention to. The only things that we can control in this market, right? There are 4 things that we can control, and that's what you're buying, when you're buying it, how much of it you're buying it, and when you sell it. It has nothing to do with how far price can go against you, or how far price can go in your favor, or, you know, whatever the case may be there. You got to just control the controllables, and that's all to do with risk. Now, I want to hop into my computer now, and we're going to go over some of the charts that are setting up. And I tried to bring to you a wide range of names from various sectors and industries. So that's what we're going to do here in the Trade Ideas section. Let's hop over to my Thinkorswim platform. All right, everybody, welcome to the Thinkorswim platform. I'm going to get into some various names. Now, I don't have positions. I have a position in like one, or I have two positions in 2 of these names. And these names are kind of a broad based. Okay, like I'm looking at healthcare, I'm looking at retail, I'm looking at sort of kind of commodity, I'm looking at a Chinese equity, I'm looking at a consumer staple, right? I'm looking at health, like I'm looking at a wide range of things. So I try to bring you kind of a bucket list of names that are setting up, maybe not ready to execute into at this moment, but have been looking good, right? Or looking like they're setting up for some sort of a move. Okay. The first one I want to talk about is Gilead Sciences. I mean, this thing it's basically, it's a very strong performer, right? If I date back to the weekly time frame, I mean, you could look at this and you're like, wow, it's butting his head on these prior highs. Oh, it's a big time, it's a big cup, whatever. But in the shorter time frame, in the daily time frame, we're right there at about that 120. You do have earnings around the corner, so that's something to be aware of. But you're building in these higher lows right at this pivot area, and these are known to be continuation patterns. It's in bullish context, so this would be one, in the healthcare space, right? This is healthcare. Yeah, this would be in the healthcare space that I would keep my eye on. Because if we start breaking out of this, I mean, we can easily go, we could double this base, right? So let's just say the base starts from down here. right, to here, and we activate this up, right, this is just a measured move, right? I hate targets, but I do like managing levels of risk. So just if we were to look at this and we get a measured move to, 145 and we play it on breakout, well, your stop can go down here and you can move as time goes. And that right there alone would be, a 2 to 1 risk to reward. Not saying that your stop is down here for sure. Maybe it's tighter on a breakout, but some of the times what I'll do is I'll like to, if that's a minus 8% move, I might, $10 per share, I like to create the structure of my position based off of that level, not based off of this level, because my probability of getting stopped out, is a lot bigger. So we do have earnings coming up. One thing that I want everyone to make sure that they do during earnings stuff is you come out here into the trade tab and you look at its expected moves. We'll talk more about that on another episode, but there you go. There is Gilead. That one looks pretty strong. Another one that made a big move today is pizza. And this one's been on my radar for a while, and it's made a big run. So unfortunately, I don't like chasing that type of move, okay? But what I do want to call out here is the weekly time frame. If I zoom into this over here, what I'm noticing here is you're starting to see kind of an advanced head, inverse head and shoulders pattern form. Now, if that's the case, that means that a measured move of just this little type of pattern, right, would bring us up to and around 75, right about 75. And where we stand currently would be up, 40%. So if I were to enter right now, I'd have to say, okay, my stop is, 30% lower or something like that, right? 22% lower, because I would want it underneath this shoulder over here. So that's a wide range. So that's why I would prefer to see this kind of cool off a bit. Now you do have earnings around the corner. So, maybe you have to wait for that. And then also I want to call out that this was the highest close all year. But when we come into these areas, you can see that we've been rejected hard. We've been rejected hard. We've been rejected hard. But every time that we've come up into that area, notice how that the bulls have been making progress through and through to those areas. And are we now finally breaking through that camp that the bears have been hiding in? So that's an interesting name. It's a higher beta name. I'd like to see it consolidate a bit, or it might just kind of get away from me. So we'll see. Another one here is in the retail space, and this is REAL, the real. I saw my wife shopping on this website the other day looking at inventory. Now, this one, I remember looking back over in these levels. I didn't take a position on this. This one does have earnings not too far away, just like every other name. But we're kind of coming back into the area where we saw some massive supply. So if this is, putting in a head and shoulder pattern, maybe it breaks down, heads lower, or forms more of a cup in a longer term, and then we could see it break through 11. So I want to see this one digest a bit more. But if I bring up the weekly time frame, obviously you look back to the left, this thing has traded higher before, but this could be, if you look at it from a weekly perspective, albeit this is a pretty deep, deep base, it's like minus 50%. But yeah, you potentially could be forming some sort of a cup with handle over here, and then a breakthrough might lead this to a pretty nice move, right? Typically cup with handles, right? If you measure it to the neckline, that's your measured move, right? That can bring us up to around $18. That'd be a big gainer, right? Up 65% on a name like this. Once again, this is another higher beta name, so you got to be very diligent with managing risk. So that one's kind of like a high octane retail trading name, right? So if we keep on getting big moves with that, that could be one to watch. Okay, so then we went through Gilead, Real, Pizza. This one I like, and this one I have a position in, PCT. I've talked about this one down here. I've talked about this one many times. I actually had my first initial position down here at the bottom of this channel, and then I entered more in over here, and then I got out of it as the price moved higher, and I took another position. I think I took another position over here or pulling back down into here. I can't exactly remember where I took it, but I'm going to show you the weekly time frame here. This is a trade idea that I already shared in the Discord community there. But if I go ahead and I'm going to go ahead and activate the 10, 30, and 40 week moving average. I'm going to go ahead and hit apply. And these are, a way that you look at potential early stages for markups, right? Markets move between 4 stages. They move between the accumulation phase, the markup phase, the distribution phase, the decline phase, and back to it again. And within there's smaller cycles. And then within those, there's smaller cycles. But then you have your larger cycles that we're pointing out. And the larger cycle is that 40 week, 30 week moving average. That tends to be the 200 day and the 150 day, right? Roughly simple moving average. Okay, so I have the 40 week up, 30 week up, 10 week is all up. So is this breaking out of a longer term accumulation, right? Let me see if I can zoom back out further. If I zoom out further, you can see it's been going sideways for a very long period of time. Is this the accumulation phase? And is this kind of the first official base being built out for a potential markup phase in a name like this? And if that's the case, I want to be very clear here. These type of patterns, they lead to great results, and they're hard to believe when they're here. I get that, but let me prove my point. So a move just of this like magnitude of a breakout here, get some consolidation, if it measures out, that'd be up to 20, $25. The reason why I'm pointing this kind of lookout is because I did the same thing with BABA and a trade idea that I shared on Twitter and then also the Discord group. This was also, right? Look at, this pullback into the averages, right? Not as deep as PCT. It was going where for a long period of time? It was going sideways for a long period of time. Okay, cool, whatever. And then you look at this, pattern over here is kind of the, second to first, like official base of a potential markup. And where did we break to? Well, if I measure from down here, I don't know why it's not doing it now. Well, basically, if I measure from down there to down there and then come up here, it was to 180. And that was the exact target level, a potential target area that we marked out based off of just, a projected move. And that's where we came into. And from that point, we're just kind of doodling around, consolidating some more. So that is why I'm looking at PCT. That's why I like looking at these specific names that have been basing for a while, and all of a sudden the averages start to turn up, because if you are moving into a markup phase, these can be beneficial. Now, also, you got to manage risk, because it could just very well break down and then boom, break LAR. We don't know where it's going to go. I just look for the potential for good setups. Okay, so I'm going to get into some Chinese names. These are in the educational space. These things have been clobbered. I can't remember the exact reason why they were clobbered. I remember though, it's on like the tip of my tongue. I remember when that was occurring, because these were very strong names. So they're well off their highs. But the reason, why I'm pointing out EDU first is because I was looking through some China names, seeing what was, doing good, because BABA took off, some other names took off. And I was looking at some names that maybe didn't move much. And I ran into some of these education names. I'm like, holy cow, these haven't gone anywhere yet. So perhaps they might start breaking. So on trade ideas yesterday, I posted this, consolidation that was taking place. I myself took a position inside of here as a speculative breakout, but the main pivot was over here at 55. Now you do have earnings right around the corner. Today, it was up 10%. So, I don't know what these are sniffing out necessarily, but this all year has been basing out, right? Been putting some higher lows. Then all of a sudden we started to see price consolidate a bit, and now we see a pretty substantial break here. Now, I don't know if it's going to right back down, right? So maybe watch the low of this candle, or wait for it to see if it consolidates, or wait for earnings to come. But if I look back at this chart and I look at the, the weekly time frame, you're seeing the higher low. You're breaking out of this kind of, base, or this potential, right, base that's been going on since the start of this year, basically. And you're getting back above a rising 10-week moving average, roughly the 50-day. The 30-week is turning flat and turning up. It hasn't crossed back through the 40-week. And then the 200-day or the 40-week moving average, the 10-week, the 50-day crossed through it, but yet it's still kind of flattening out. So it's still, I think, early in this whole realm of things. But if this starts turning back up, right, and this starts flattening out, starts turning back up, maybe it does lead to some sort of a markup phase in various educational stocks. Another one was TAL. This one did not perform as well as the EDU trade that I took, but still, nonetheless, it was doing really good intraday. And I think what had happened here was it bumped into its year-to-date, I don't have it on my screen, but the year-to-date VWAP, and then started rejecting from it. Needless to say, this one was up higher this year, and now it's been kind of going sideways, chopping around a little bit all over the place. So I like the look of EDU a little bit better. Now, if I look at the weekly time frame, you get these higher lows being built, right? And then you kind of got these kind of matching highs in a way. So if you do start to potentially clear in and around these areas over here at about 1150 to 12, maybe this opens the door to do a retest of these levels and starts to actually build into something, of a bigger move here in a name like this. Okay, so there's that. Let's move on, and I want to go into a cannabis name. This is MSOS, so this is an ETF. Okay, so you can look at individual names that are the holdings in these if you want to get some more juice. But I'm pointing this out because the same thing kind of applies. I've looked at this many times, by the way. You can see some markups on my chart. When we started to get back above a 30-week, 40-week moving average, started basing out, boom, 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 and then it faded and got back underneath it, right? So this is a potential markup phase failure, right? Now it's doing it again, right? So can it fail again? Yeah, obviously it could. But is the potential for a markup phase occurring? And I would say, yes, it is. And this would be an initial base of that. So the 10-week is rising higher. The 40-week is starting to turn back up. The 30-week is turning up. And then if you look out onto the daily time frame, right, you're seeing some good spikes of green volume, and you have price action starting to kind of base out here, put in higher lows. So this right here is opening the door for potential move, a base breakout, right? I don't know when that might be. If it wants to do more stuff, I would actually prefer that to happen to break higher. Okay, so I like the look of these various cannabis names, and you could go MSOS, you can go to like the OK, right? This one looks more technically clean, actually. This one had a great base breakout over here, very clean look over here. You have, I think, MJ, right? This one's a little bit more kind of all over the place, a little bit more sloppy, but yet again, right, you're still seeing these bases kind of building in these cannabis names, all right? So I'd be keeping a close eye on various individual names or ETFs, right? I traded Tilray, a little bit of Tilray. It wasn't much. I had it on this flag, and then I sold the bulk of it on earnings, right? One, it was a flag. One, two, it's a volatile name. And then three, I knew the expected move, what it was. And I was okay with losing that kind of risk because of the position was so small. So I gained some, which it sounds like a lot, but let me see here. Let me see how much I gained. I sold it basically at 45 cents up. Yeah, it was about a 30% gain, but it was on like not even a 1% position. So it was really tiny. Okay, this name's pulling back, like kind of pulling back into those levels. Okay, GLASF, right? Another name. This one broke out today of this base. That's a pretty strong move there in a name like this, and this is a cannabis name. I've traded this one in the past, but this one's coming back up to these prior highs over here. So yeah, cannabis names, I'd be keeping some eyes on those. And then a more retail frenzy name, Hims. I don't love trading this name, but I will say that from a year-to-date perspective, this is looking pretty sharp. And then today it was up 16%. So I'm not a big fan of chasing this, but look at the year-to-date chart. You have this, squeeze higher, right? Higher lows, and then you have, tighter price action, and then finally a breakout over here. So, I mean, this is kind of has that look of, is this thing going to just all of a sudden just explode to the upside in your trade or in the future? And, if we keep on seeing these squeezes in various names, that's a very strong possibility. Now, like I said, I'm not a big fan of trying to jump right into this. So if I go into the daily time frame, the intraday time frame, you saw a big squeeze here. It's coming back into and around 60. Okay, so yeah, back into and around 60 maybe might make more sense, or into the 57 range if it comes back into those levels and then starts to bounce off, and then maybe you can initiate a position that might make more sense. But just understand that, from this area, right, if your stop is going to be at the low of that, that's minus 10%, $6 per share. So you got to be okay with losing that, and that's where you kind of develop the risk. So if you go too big of a position, you don't want to lose 10% of your entire portfolio on a single trade that can be taken out in a single day. So you got to make sure you adjust. If you go back a little down a little further, minus 15%. So you got to feel comfortable with losing 15%, because on the flip side of that, if we start expanding to the upside and this thing just explodes, I mean, you're going to make a lot. Yeah, you're going to do good. It's all about just risk to reward, okay? That's all I got for you on today's show, everybody. Hope that gives you some insight into some names that are setting up, but also some interesting catalysts that may be potentially building. I'll see you on the next show.